the dysfunction here of the flows in the capital ownership of debt is tangible, and you see it with the Japanese and other percentage of debt. Do you have an inherent fear within your strategy when you see ratios like 260%, or where another nation owns 8% of France's debt?
I've got so many thoughts on the Bank of Japan. One, I think they missed an opportunity. I would have done something today and keep the process going of get to something that looks normal while the rest of the world is doing it. We talk about the top end of the band is 0.5%. The target's actually 0, and official rates are actually minus 10 basis points. So there's a lot of room to get things looking somewhat normal while you're printing 4% inflation, and then start the process of transitioning the bond market out of the BOJ hands into public hands, into private investor hands. Get that process going. Now, as I'm saying that, I also get concerned about what that means for assets in the rest of the world, because many of us in the markets for a long time have known that Japan is the mother of the carry trade, that Japan finances carry trades in the U.S. market, in the European market.
That's where Liverpool takes someone from the tots and borrows them. I get that. That's jargon. What is a carry trade?
A carry trade is to use the very low cost of funding in Japan and then take your capital at your cost of funding and then send it to somebody like me to invest in the U.S. bond market, in the corporate bond market, at yields of 4 or 5% or higher. So you're enjoying a much higher yield than you would have by staying in the domestic market.
So how do you think